It's the Friday edition of Business Morning. Welcome and thank you for joining us. I'm Chimeze Obi Iwago. Well, the coronavirus pandemic is unfolding into an event that will starkly define our world in many ways. We are having to reassess and adapt our most routine behaviors, such as how we work, shop, and communicate with loved ones. And it is inevitable that when this is finally over, some of the changes we have made will lead to permanent behavior change. The response from businesses involved in payments has had a clear theme, and that is discouraging the use of cash to rule out its ability to spread germs. While the WHO has stopped short of actively discouraging the use of banknotes, some experts say when possible, it's a good idea to use contactless payments, and that is where mobile money comes in. Joining me now to look at this is the head GSM Association Sub-Saharan Africa, Mr. Akinwale Goodluck. Good morning, Mr. Goodluck. Thank you for joining us.
Good morning, Chimeze. Thank you very much for having me.
So when we talk about mobile money in Africa, Kenya's M-Pesa comes to mind. Can you give us an overview of what mobile money is like in Africa?
Thank you very much. I think we've seen mobile money continue to trend in all the right directions in sub-Saharan Africa. M-Pesa has become the poster boy for mobile money all over the world, and particularly in Africa and South Asia. The good news, however, is that the mobile industry today has a host of seasoned providers with a broad set of operational capabilities, a full suite of products, and I would like to say global reach. At the end of 2019, we've seen mobile money continue to grow extensively in sub-Saharan Africa, with about 470 million registered mobile accounts in sub-Saharan Africa today, representing about 12% year-on-year growth. We also have about 181 million active accounts. These are accounts that have done a transaction in the last 90 days, and a total in excess of 23 billion transactions in 2019, with a value in excess of $456 million. Again, trending in the right direction. So you can see that mobile money is definitely on the up across Saharan Africa.
Now, the efficiency of the payment and settlement system of most countries is considered as a major catalyst for growth. In Nigeria, the velocity of circulation of money is approximately 5%, and GDP growth rate is about 1.87% compared to Kenya's velocity of circulation of money of 3.1% and GDP growth rate of about 5.4%. Do you think that the adoption of an aggressive mobile money and wallet system will help the Nigerian economy, which is already technically in recession?
Absolutely. We like to think that we like to say that Nigeria is a sleeping mobile money giant, and it's also home to the continent's highest adult population, with an unbanked adult population of about 60%. So we see that the unbanked is a significant challenge for us in Nigeria, but I also like to think that it's an even more significant opportunity. We've seen great progress through the emergence of a lot of the app-based wallets, and players like InterSwitch and Flutterwave deserve a fair amount of commendation. However, to reach the majority of the unbanked in underserved areas, we need an aggressive mobile money regime. We need a mobile money regime that is ubiquitous. We need a mobile money regime that has brand recognition, is trusted. It's not necessarily internet reliant. It's not necessarily smartphone reliant, and has a significant agent network.
Now,
go ahead.
Yeah, Delarue, that's UK's money printer, is suggesting that the use of cash as a medium of exchange is likely to fall, as one of the myths of the COVID-19 pandemic is that community transmission of the virus could be accentuated by the use of old notes. Now, do you see this fear and likely switch to electronic payments as a big opportunity for the telcos and the mobile money products?
Yes, I tend to agree with Delarue that for sure it will not be business as usual post the pandemic. Mobile money has been a great discovery, and I'd like to say ally in the fight against the pandemic. Mobile money reduces the need for face-to-face interactions and exchanges, thus limiting the spread of the virus. We also saw mobile money as a big enabler in several African countries during the lockdown and curfew. We also see that operators were quick to rise to the challenge by encouraging the use of mobile money in many jurisdictions, removing or reducing the cost of transactions completely. We also saw in the course of the pandemic, a lot of governments and humanitarian organizations have been disbursing cash palliatives, and mobile money has proven to be a safe, effective, and transparent way of doing this.
Now, the banks in Nigeria are concerned that licensing the telcos as payment service banks is a recipe for cannibalization of the financial services industry. Do you think these fears are justified, and how can they be allayed?
I think that the concerns, in terms of cannibalization have largely been unproven in most markets. When you look at Ghana, you look at Kenya, you look at Ivory Coast, and you look at India. In most of these markets, we have seen an increase in bank accounts in tandem with mobile money adoption. I like to say Ghana and Kenya are great examples. Mobile money helps mobilize deposits for the banking sector, and I mean deposits that would otherwise have either been too costly or inaccessible for traditional brick and mortar banks to mobilize. So in most jurisdictions, the pooled funds can only be intermediated by the banks. The payment services licensees are not allowed to give loans and do a lot of other things. So, I think that mobile MNOs and banks must worry less about whose lunch will be eaten, but rather focus on jointly baking a much larger cake.
Now, are there any risks to the financial systems?
Well, when you look at mobile money and how it operates, mobile money processes a lot of transactions. In terms of the number of transactions, it will typically eclipse the number of traditional banking transactions. But when you look at the value is always a very small fraction of the total throughput in any economy. Kenya, that has the highest mobile penetration rate in sub-Saharan Africa, in excess of 73–74%, only processes less than 10% of its throughput via mobile money. Ghana is 4%, India is less than 1%, if I recall correctly. And when you look at the size and the robustness of the Nigerian financial system, it can definitely support a lot more in terms of mobile payments without any systemic risk. Nigeria already has significant, robust anti-money laundering provisions. It has, is one of the leading African countries in the area of data privacy, and MNO networks are also very, very secure. Don't forget also that mobile money has set maximum thresholds. So the possibility or the risk of, I don't think it poses any systemic risk at all to the financial system.
So why haven't we seen telco-led models as opposed to bank-led models for the mobile money industry?
I think one has been a question of regulation. Two, whenever there's disruption, there's always resistance. In 2018, the central bank came up with new regulations, and pursuant to those regulations in 2019, I think it issued 3 approvals in principle. The expectation is that the central bank will go ahead to license all the major telcos in Nigeria, ensure a level playing field, and allow mobile money to scale. So we're definitely headed in the right direction. It will require a little bit more political and regulatory will, and also regulatory certainty to deliver the objectives of the CBN to achieve 95% financial inclusion by 2024. So the bottom line is regulation.
Inclusion. Yes, financial literacy and, of course, inclusion is considered as a major ingredient for development in African countries. Now, Nigeria has an unbanked population. You did mention that, of approximately 60%. Now, do you think that mobile money and wallets will accelerate the process and thus enhance the development of the financial system?
Absolutely. The industry has an opportunity to play, for what I like to call a catalytic role in expanding the reach of financial services to underserved and underbanked rural communities particularly. It also will help to lift vulnerable people, the most vulnerable people in our societies, out of poverty. It will bring credit, it will bring lending for a lot of people in our rural communities. Their telephone number is their address, is their database, it's everything to them. They can't afford to lose it. So it gives us an opportunity to almost overnight bring banking services to all those who remain unbanked in Nigeria.
All right, so how would you compare what is being done in Kenya and what is done in other African countries? And of course, what lessons are there to learn?
I think one thing is that Kenya was a pioneer. Mobile money is about 11 years old in Kenya. So they've had a good opportunity to learn and to sort of develop best practice. Mobile money is well regulated, well controlled and governed with a very liberal regulatory framework in Kenya, allowing banks and non-banks to participate. I think also that the authorities in Kenya have recognized that Kenya is a mobile-only country, just like the rest of sub-Saharan Africa, and they have leveraged their financial inclusion strategy on mobile technology. What you also see in Kenya is that adoption and usage has been driven by an unparalleled entrepreneurial spirit and also a very robust agent network. We have all these things in abundance in Nigeria, so I'm really confident that with the right regulatory support, we can achieve and perhaps even exceed the achievements that we already see across sub-Saharan Africa. The relationship between banks and MNOs in Kenya is also very instructive. It's symbiotic and complementary. Bank accounts have overtaken mobile money accounts in Kenya. As mobile money account holders grow, they will migrate to traditional bank accounts. And the great thing for the banks is that by the time they're migrating, they're already accustomed to digital banking. So it's a much easier customer to onboard. It's a cheaper customer to service, and also brings with it all the other benefits.
And so what is the outlook for Nigeria and indeed Africa's mobile money market?
I think the outlook is very, very bright, subject to some of the regulatory issues being sorted out, the build of trust between the banking sector and the communication sector. We have all the ingredients to really, really do great things. I think perhaps the biggest potential for mobile money in Nigeria is the ability to very quickly digitize government payments. We've seen very successful examples in a lot of other African countries, and I think that Nigeria will follow the same trajectory. So,
all right.
Yeah, okay, thank you.
All right, thank you very much, Mr. Akiwale. Good luck. He's the head GSM Association Sub-Saharan Africa. Thank you for your time.
Thank you very much. Pleasure.